Permissionless ICOs on MetaDAO are gonna change crypto token launches forever. What's up, Futards? The last few weeks have been super volatile and bumpy for MetaDAO fans and more generally ownership coin lovers. But now we are finally back on track and ironing out all the bumps along the way. And that's exactly what we are gonna discuss in today's episode. First off, I would give you a short recap of the Ranger ICO and all the things that went slightly wrong there, but also things that worked out perfectly well, and give you the short aftermath of everything that happened there. Before we then dive into the topic of today, which are permissionless ICOs, which will revolutionize on-chain capital formation forever. Furthermore, I would like to share with you some highlights of the monthly update that Prophet, the co-founder of MetaDAO, shared with us just a few days ago, and highlight one key feature that he mentioned there, which is the bit wall. And I will explain to you this novel mechanism in detail, and then we will close out this presentation talking about Meta and how it could achieve unicorn status by the end of this year, which would give it a valuation north of $1 billion, which would imply almost a 10x from current prices. All right, so without further ado, let's directly jump in. Let's kick things off with a short recap of the Ranger ICO that happened roughly 2 weeks ago on MetaDAO. So the Ranger team wanted to raise at least $6 million for their ownership coin via MetaDAO and ended up raising a total of $8 million in the end from 8,700 unique contributors. And in total, almost $80 million have been allocated to their ICO. And yeah, they decided to take 8 million out of these 86 million allocated. If we compare the Ranger ICO with other token launches that happened on MetaDAO in the past, we see that Ranger was the third largest ICO in value committed. Only Umbra and Solo were larger, and it was the largest ICO in terms of total value raised, exactly on par with the Solomon raise that happened 1 month ago. Both teams ended up raising 8 million. Now let's take a look at the pro rata raise, which is also a very interesting variable to look at. As we all know, usually there is a massive overcommitment on MetaDAO raises, and people never get the allocation that they desire. So yeah, for Umbra, for instance, for $1 allocated, you were only able to receive 2 cents, 8 cents in the case of Solomon, and so forth. But here with Ranger, for the very first time, they introduced, or they battle tested, a new feature which allows points holders, so people, loyal users of Rangers, folks that used their platform before and traded perps via the Ranger frontend, they accumulated points and hence got priority access to the ICO. So everybody that held Ranger points, they got a larger share of the ICO, and folks with points that allocated $1 to the ICO received 42 cents worth of Ranger token, while public allocators only received $7. So some of you might now be confused. This is not a rug. The way it works, let's say that, yeah, we want to allocate $1,000 to buy the Ranger token. So points holders, they received $420 worth of the Ranger token, while $580 were sent back to them in form of USDC. So they didn't lose any money. Just that the difference here is that the public allocators, they only received $70 worth of Ranger token, while the vast majority of their committed funds, namely $930 in our example, were sent back to them. Cool, so far so good. But then just 2 days after the ICO concluded, the Ranger token started to tank as they raised 8 million. The initial price or the price at which people bought into the ICO was 80 cents, but just 2 days later, the token was trading roughly around 60 cents, so down by 25%. And then some folks from the community, or just generally participants of the ICO, they proposed to use 2 million from the recently raised treasury to buy back the Ranger token. And of course, this caused a lot of waves and controversies. And yeah, the proposal went live for voting, and in the end it passed. Hence, 2 million out of the 8 million that the project just raised were taken away or taken out of the treasury in order to buy back the token below the treasury value, because here is this beautiful arbitrage. The token, let's say, is trading at 6 million while the treasury is worth 8 million. So by taking parts of the treasury to buy back the token, this arbitrage could in theory be arbitraged out. And that's exactly what happened. At least like people voted for it to pass. And now over the next 30 days, those $2 million will be used to buy back the Ranger token in 5 minutes steps until the $2 million are fully exhausted. And they will, of course, only buy back the token until the price of 78 cents. Should the token price go above, the buybacks will stop. This proposal was not officially supported by the team, hence it caused some back and forth. But yeah, in the end, it passed. But looking back at what really happened, I think, yeah, this is the aftermath. So we see here this initial drop down to 60 cents. So here the proposal was raised and the price immediately bumped back up to roughly 70 cents throughout the voting period. And people thought that, yeah, the price might go back down to 80 cents. But then, very curiously, the moment the proposal passed, yeah, the price started to tank one more time back down to like almost 50 cents. And now here, I think these little daily candles, probably that's the buyback mechanism. But in the end, I mean, in my view, this was a waste of time, a waste of money. But yeah, it was a worthwhile experiment to run. And I think all the players learned their lesson. Fortunately, I didn't participate in this ICO since, yeah, I'm not a perps trader and I didn't do my research on Ranger. I just thought that I have no edge there, hence I passed on this one. But yeah, here a short recap of what went wrong. Why did this proposal pass with a major majority? I think the number one reason was greed. In the past, almost all MetaDAO raises performed extraordinarily well. They just went up 10, 20, 30% straight after the ICO. And this, of course, attracted, let's say, greedy or uninformed participants that just thought that here they can make a free 20, 30% on their stablecoins. And of course, sooner or later, such setups will backfire. So yeah, that's one reason. Other people argue that the Ranger team itself over-raised and they should have taken only 6 million rather than 8 million, because their initial goal was 6 million, but they ended up raising 8 million. Hence, the market punished them because they took too much money and they didn't consider or deem their product being worth that much. And that's exactly the price Ranger is trading at currently. So that's also a very valid criticism or point. Then other people say that the MetaDAO funding mechanism has fundamental flaws and it should be forbidden or not possible to use liquidation proposals within the first 1 to 3 months, because what's the point? A team is trying to raise startup capital to bootstrap their operations or to just add some runway to their project. And I mean, it's pointless if 2 days later the community decides to partially liquidate parts of their treasury. And then another very intellectually honest criticism is that Polymarket skews up incentives. Because for those of you that are not aware, whenever there is a ICO raise on MetaDAO, there is a concurrent Polymarket, a prediction market on Polymarket that is trying to predict the amount of money that those projects are gonna raise. And hence, it is easy for big whales to make a lot of money in Polymarket. So they just deposit 20, 30 million into the MetaDAO ICO by manipulating the markets over on Polymarket, hence cashing in their large sums of money. And then the moment the ICO is over, they just dump their tokens they bought on MetaDAO. They don't mind if they dump it at a loss, because probably their loss is 100K, but on Polymarket, they cashed in 2 million. So it was a very beneficial trade for them. Hence, yeah, probably going forward, Polymarket should no longer list those raises. And as far as I am aware, Profit reached out to the Polymarket team asking them to no longer list such markets, but yeah, for whatever reason, those markets were spun up nonetheless. So this is what went wrong. But one thing really worked out as it was intended to do, and it was Futarchy. Because remember, guys, those ICOs, also claimed Unruggable ICOs, have the purpose that investors like you and me no longer get rugged. And in this case, some investors were not happy and they thought that the team might run away with their funds or whatever. They just overbought. Hence, they were able to claim back parts of the treasury, which is owned fully by them, or just use the treasury to buy back up the token price. So this is definitely one thing that I think most people out there neglect, but should be highlighted. And if we look here at 𝗪𝗵𝘁's comment, he says that it will be very tough to support tokens without some structure similar to MetaDAO governance rights going forward. And what he highlights here is the recent token launch of 𝗬𝗲𝗿, which did not launch on MetaDAO, which is not an ownership coin. And what these guys pulled off is just, I mean, hilarious. They raised 11.5 million in their ICO, and just 4 hours later, here you see this massive red candle, the market cap tanked to below 1 million. And there is absolutely nothing that ICO participants can do. Their money is gone. They cannot claim it back. They cannot raise a proposal to buy back the token. Nothing. So they basically are now down more than 90% within 4 hours. And the team is still sitting on $11.5 million, which they just raised through this ICO. And that's exactly the point of Futarchy and the key problem that MetaDAO is tackling with their Unruggable ICO platform to prevent these kind of things. And that's exactly what happened in the case of Ranger Finance. Investors took a little hit, 20%, but yeah, funds are still there and the team cannot run away with the money. But of course, MetaDAO is not perfect. There are a very young team with a novel product that is live for a few months now, and they have to keep iterating and improving it along the way. And here is a proposal by Resolve, which suggests some improvements that are currently being considered, and I'm sure they will be implemented pretty soon. So first, they propose a delay on hard proposals, which are buybacks, liquidity changes, or large disbursement, at least for the first 30 days after the ICO, which makes total sense. Moreover, other guardrails that they propose going forward is to fine-tune some of the mechanics of buyback proposals. So instead of the default of 3% of the pass threshold in the future, if a proposal suggests or promotes a buyback, it has to pass with a 5% threshold, otherwise it will not pass. On top, there should be a longer trading window. Rather than 3 days, the trading window in which participants can move in and trade for yes or no should be between 5 and 7 days. And then once the proposal passes, buybacks shouldn't start immediately just to protect some front running from market participants, but they should be delayed for a few days. And in order for a buyback proposal to go live, the stake required should be increased from 5% to 15%. And finally, once a buyback proposal passed or went up for voting, whether it passed or it was rejected, there should be a cooldown period of at least 90 days before another buyback proposal can be brought up. Now let's talk about the positive things. As 𝗪𝗵𝘁 here said, the floodgates are now open, because the Ranger ICO was the first project that launched a token via MetaDAO that raised a traditional venture round before. Previously, it was not able for folks that already raised money from VCs to launch a ownership coin on MetaDAO, but now that Colosseum introduced this new token standard STAMP, which stands for Simple Token Agreement Market Protected, this now enables people to migrate their private investor cap table into token allocations on MetaDAO. So this is a really breakthrough innovation, because now, as we see here, STAMP bridges the traditional private fundraising with public tokens that can later be launched on MetaDAO. Because as you all know, and if you just spend a little time on Telegram or on Discord, I mean, crypto investors are so impatient. They're just looking for the next 10x and they want to have it now. And yeah, if the token just doesn't perform as they want it to perform, they keep blaming the founders, the team members. And honestly, it's a huge, huge burden on some teams to constantly just communicate and discuss with their community why the token isn't pumping. So I understand everybody that first wants to raise a little bit of private money from seed investors or venture capitalists without immediately launching a token to just, circumvent all these community issues. And then later, the moment they find first signs of product market fit, they can use Stamp and launch their ownership coin on MetaDAO, onboard community, so on and so forth. And yeah, that's what Mehdi thinks and many others out there, that this Stamp proposal will usher in the ownership coin super cycle. As he posted here, the age of meme coins is over. The time of ownership coins has come. And here we see that, like Mehdi, he is the co-founder of 𝗪𝗁 that introduced this new token launch mechanism, Stamp, that he received 100 plus DMs about 𝗪𝗁 Stamp, many from leading VC-backed startups and crypto's largest funds. So what this means, and this general term ownership coin super cycle, is that going forward, there will be many, many more ownership coin launches on MetaDAO, because the entire industry is sick of meme coins or of governance coins that don't entail any ownership rights, unlike MetaDAO's ownership coins that come with full ownership over the treasury, the IP of the protocol, and all future cash flows, which we all know is not the case for current tokens. Now let's take a look at the monthly update number 7 that summarizes the month of December and was named Back on Track by Prophet himself. So here are the highlights of Prophet's blog post. In the last month, the Ranger ICO took place on MetaDAO. They re-audited some of their smart contracts and refunded some users that just blindly sent out money to a contract address, which is just stupid, but nonetheless, the team decided to refund everybody. Furthermore, they migrated to a new DAO and developed optimistic governance, which in short gives founders more freedom over their operations and treasury management overall. And finally, the Futarchy 𝗪𝗵𝘁, which is MetaDAO's native DEX, was integrated with CoinGecko, and the Bitwall program shipped, which we will discuss in a minute. And going forward, so the main focus for January and February is to accelerate the path for founders, meaning to make it more frictionless for everybody out there to raise capital on MetaDAO. And then Prophet concluded his blog post with the following words that I wanted to share with you here. So he said, what gives him the conviction to keep going is that he has never questioned for a second that MetaDAO is doing something special here. It is not often that you get to reshape the way humans coordinate. The last time we did so was arguably 3,000 years ago with the birth of democracy. It's even rarer to be able to do so through a growing business that makes money. Yeah, he refers to MetaDAO here. It's a fast-growing business and they are already making money. He is incredibly grateful to be able to work on this problem at this project right now. Love Prophet. And that's also what Sasha stated here. He said that Prophet is a S-tier founder on a path to revolutionizing capital formation / allocation. The future is not hard to see. You've already seen it. You just don't realize it because you dismissed it as a toy. The kinks will be ironed out because the problem is real. The problem is that, yeah, these days it's really hard to raise money from the internet in a reliable and unruggable way. And that's exactly what MetaDAO is addressing. And the intellect and willpower is their belief plus a sense of urgency, which, Prophet and his co-founder 𝗪𝗏 both embody. So he sees it as a recent speed bump and as a generational buy opportunity. I did too add some more meta tokens to my bag over the past few weeks during this massive volatility, and still today Meta is trading around $6. I think those are very, very recent entry points if you have a time horizon longer than a goldfish of at least, let's say, 8 to 12 months. Now let's talk about the elephant in the room, permissionless ICOs. So here, beautiful post from the MetaDAO project on X. The people demand permissionless ICOs and we shall deliver. And that's another key strength of the MetaDAO team. They are in constant communication with the community, try to absorb their feedback and implement it as fast as possible into their product. And just the general iteration and shipment speed is unprecedented. What does Prophet say about permissionless ICOs? Here, quoting him, shipping an accelerated path for founders is our #1 focus right now. A path on where they don't need our permission to get financing. Until now, everybody that raised money through MetaDAO, they needed the permission of the team itself to spin up the ICO. But going forward, everybody out there can just use their platform to raise money and no longer ask them for permission, which should just accelerate the launch of ownership coins tenfold. And in their Telegram, somebody asked, when permissionless, sir, and Prophet said the target is February. So pretty soon, within a few weeks, we should have this feature live if everything goes according to plan. Cool. Now I wanted to discuss with you shortly the Bitwall buyback mechanism that was introduced lately, which is nothing else than a protection for both investors, but also the team that raised money, and should stabilize the initial price after the token launch by providing this Bitwall that absorbs all the sell pressure right after the token launch and gives everybody that participated in the token launch the option to sell into this Bitwall and burn their tokens if they no longer deem this investment as worthwhile. So here is how the mechanism exactly works, and it was made to enhance the fairness and pricing stability for MetaDAO ICOs. So here in the middle, we have this Bitwall that absorbs all the excess funds that were raised throughout the ICO. So let's take the case of Ranger. They wanted to raise a minimum of 6 million, but in the end, they decided to take 8 million. So automatically, the difference between the minimum and the actual amount that they raised is sent to the buy wall. In their case, 2 million difference, 6 million minimum, 8 million what they raised. And now, for 90 days past the ICO, everybody that participated in the ICO, they can sell their tokens if they want into the Bitwall, which guarantees the same price as the ICO minus a 1% fee. So people that think that the team overraised and are not happy with the current valuation, they can just sell back their tokens, take a 1% fee cut, and their tokens will then be burned forever, which reduces the supply and increases the share of all the other folks that keep holding their coins. And then once these 90 days are over, all the unused funds, so let's say the 2 millions, only 1 million was sold back in here, then the remaining 1 million goes back to the DAO treasury. And what are the benefits or the purpose of this Bitwall? It is to support the token price right after the ICO and just reduce market volatility right after the token launch and provide this exit option for folks that thought that the team over-raised. And it just gives a general protection to everybody that participated in the ICO and wants to keep holding. And as outlined here, this feature was introduced to enhance the security of those ICOs, but more importantly, designed to tackle the problem of oversubscription, because in the past, or as it was also the case with Ranger, people just allocate way too much money to those ICOs, so the team could theoretically just take all of this money, but by introducing this Bitwall, only the minimum target is kept at the initial treasury, and everything that they raise above the targeted money raised will be temporarily positioned in the Bitwall to give investors a potential exit path. And to clarify one thing, somebody here asked on X, at which price is the Bitwall set, at the valuation of the ICO or the valuation of the treasury? And Prophet here replied that the Bitwall is set at the value of the treasury, so the program automatically lowers its bits as the treasury gets spent over the months, which is a pretty neat feature if you ask me. Then we had another Futarchy or decision market proposal, but this time directly affecting the Meta token itself. And yeah, here the team proposed to engage market makers for the Meta token to deepen the Meta USDC pair on DEXs and finally bring the Meta token to CEXs. So here we have a short overview. So what they propose is to take 1 million USDC out of the MetaDAO treasury, as well as 6,000 Meta tokens, and lend them to market makers like 𝗪𝗵𝘁, Flowdesk, and others, and engage them to deepen the liquidity for the Meta token and to kickstart this liquidity flywheel. Because as you know, currently the liquidity for the Meta token is pretty shallow, and the deeper those liquidity pools are, the more volume can be routed through those pools, since the slippage decreases and larger players can finally buy into the Meta token without suffering massive slippage and moving the market massively towards the up or the downside. And after those 12 months, the 1 million USDC will be returned back to the treasury and all Meta tokens will be burned. And here are the KPIs of the market makers that are gonna be engaged in this undertaking. They have to have an uptime of 95%. The depth of the liquidity that they are gonna provide should be at least 40% of the loan, and the bid-ask spread on the DEX should be lower than 0.3%. And of course, this proposal passed. It was a no-brainer. Everybody knew that this is beneficial for the DAO, hence very little trading volume, because everybody was aligned on this proposal passing. Sweet. To wrap up this presentation, let me share with you the bull case for the Meta token. Here we have Ryan Connor, head of research at Blockworks, and his #1 prediction for 2026 is that ICOs are gonna realize product market fit, and he says that on MetaDAO alone there will be more than 200 ICO launches in this year. And especially integrations like Stamp will drive meaningful adoption of ownership coins, and VCs can participate alongside retail investors. Furthermore, he highlights that small VC-less raises at a valuation of sub 1 million will become more common, and this perfectly ties into the upcoming launch of permissionless ICOs. Here we have Ceteris, the head of research at Delphi, so another very bright mind, spending most of his time researching crypto projects, and he says that his highest conviction prediction for 2026 is that MetaDAO becomes a unicorn. Just for reference, a unicorn is a project with a market capitalization of more than $1 billion. And if this is correct, it will also be the first unicorn in a very long time, where gains were entirely public, since MetaDAO, the token is out since the inception of the protocol, which I guess dates back 2 or 3 years, and retail folks could invest in it from the very beginnings. And currently MetaDAO is trading at a market cap of a little bit more than 100 million. So if it were to become a unicorn, it would need to do almost a 10x this year. Here we have the asset holdings of all the 𝗪𝗫 analysts, which they always outline at the end of their yearly research report. And here, very curiously, most of them, or MetaDAO is a token that many research analysts hold. And if you just go down the list, here are the no-brainer Bitcoin Hype, Sol, Ethereum, Zcash. But then MetaDAO is probably the highest ranked non-consensus altcoin out there. And Matthew Ney outlined one more time that 2026 is the year of ownership coins. But MetaDAO goes beyond ownership coins and ICOs, as John Karp highlights here. He says that prediction markets went mainstream in 2025, and decision/impact markets will break out in 2026. And decision markets is nothing else than Futarchy, which stands for market-driven governance. And he says he has a 100% conviction that decision markets will go mainstream within a few years if it doesn't happen in 2026. And decision markets will reshape how major companies and governance all over the world will make decisions, and how investors trade them. And their companies to watch out for are MetaDAO and Light Connect. And to conclude this presentation, I would like to leave you with the words of Brian Armstrong that he dropped just recently at Davos in an interview.
Well, so part of our everything's changed vision, we think everything should be tradable, but prediction markets are this really important new emerging category. So I say prediction markets, there's a few parts to it. So some of it, frankly, is people, betting on these outcomes in sporting games and things like that. That's okay. That's one thing. The more intellectually interesting part of it to me is that people are also betting on what's going to happen in the next week or two, almost as an alternative to traditional media. Sorry, not to create a competitive thing here. And they're trying to. So it could be on a political election. It could be what our interest rate's going to be next quarter. It could be, is the Suez Canal going to be reopened, because I need to understand if I can put my ships through there as a multinational. And so people are just trying to figure out what is true, but what is going to happen in the future. And what we found is that there's much higher signal when people have to put skin in the game with real money. So I think that prediction markets are potentially an alternative to traditional media in some way. The other crazy idea that could emerge here is that I think policy legislators will use it to understand what policy could be best. So for instance, if there's 3 proposals and you want to say which one is going to lower unemployment the most, you can actually put those proposals out where if they are enacted and this happens, you could get payout. The market will basically give you very clear feedback about which policy they most believe should be implemented, and maybe that helps legislators decide what to do.
His words were crystal clear, and there are no doubts that Brian Armstrong, the CEO of Coinbase, is Futarchy built. And just as a reminder, Prophet kickstarted MetaDAO to bring Futarchy to the masses, but it was too early, hence they pivoted to ICOs and ownership coins. But Futarchy is still part of their roadmap, and it's already a product that is live with their decision markets. And he said, I don't talk about it as much these days, but Futarchy is still the most impactful thing that's happening in the world aside from AI. Let that sink in for a minute. Cool. That's it for today, guys. As always, thanks for watching. And if you want to support me and this channel, please hit the like button and subscribe below this video. And if you would like to know which ownership coins I am personally holding, please join us at Onchain Trenches, a passionate community of DeFi users, on-chain trenchers, NFT lovers, and so much more. That's it for today. Thanks for watching. See you in the trenches.